Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. Here are your 3 things. Number 1, the Fed meeting outcome. Is the Fed at risk of falling behind the curve? Number 2, connecting the dots on Israel-Iran war, the crude oil market, and the sinkers. And number 3, retail sales. Focus on the control group, not on the noisy headline. So number 1, we feel like the Fed faces policy purgatory. They're waiting to see if tariffs will push up inflation or if the slowing economy breaks the already cooling labor market. Maybe both in a worst-case scenario. The quarterly summary of economic projections contained a whiff of stagflation. Growth was marked down, inflation estimates were marked up, and unemployment was marked up, all for 2025. Jay said they want to see more data over the summer. And he believes he has this luxury because the economy is in a solid place. And we agree that it is in a pretty solid place. But the data tend to be backward looking. Thus, they will be late again. The Fed dots have 2 cuts priced in by year-end 2025. We think there's a good chance there'll be 3, one in September, another in October, and another in December. But the terminal rate was pretty much unchanged, right around 3%. So the Fed still has an easing bias. Remember, we're 4 3/8. 3% is quite a long ways away from here. So there's plenty of room for the Fed to cut back to neutral. Equity prices, bond yields, and the U.S. dollar did not move much on this Fed meeting. So we don't think there was that much new news in this meeting. But at some point, one of the Fed's mandates will win out over the other. And we think it's going to be the slowing economy winning out over inflation concerns. Now on to number 2, connecting the dots on the Israel-Iran war, crude oil market, and the sinkers. Well, in our opinion, Israel is unequivocally winning this war, and they're going to continue to win this war because they brilliantly decapitated much of the military leadership in Iran at the very beginning of this war. It's been astonishing how impressive their information gathering and their execution has been. We noticed today that the Tel Aviv 35 equity index, which is Israel's main equity benchmark, is smashing the new all-time highs. It's up over 5% since the war broke out. And the Israeli shekel is at the strongest level against the dollar in over 2 years. Those are 2 really good indications that this war is going very well for Israel and very poorly for Iran. And having watched Bibi Netanyahu for years now, and watching his execution of the war against Hamas in Gaza, we have learned that Bibi does not back off until the mission is accomplished. So we are settling in for a longer conflict until Iran is completely incapable of launching any kind of nuclear strike on Israel or anyone for the foreseeable future. We do think that they will be successful with or without the help of the United States. So the White House seems to be split on whether they're going a no or a no-go on using bunker-busting bombs to degrade the Fordow nuclear enrichment facility. We really have no idea. The president is very difficult to predict and is prone to different impulses at different times. But we look at the betting markets, and Poly Market has the odds of a U.S. strike on Iran before July at 45%. So basically a coin flip. Now on to crude oil. So crude oil, in our opinion, is a tactical sale. If not here, then certainly on any U.S. attack that would send the price materially higher. We think Iran is highly unlikely to block the Straits of Hormuz. They would have to be in absolute desperate straits to do so. Their biggest client for oil is China by far, which takes the vast majority of their oil at discounted prices. And believe me, China wants this cheap oil to continue to flow to it through the Straits of Hormuz. Even if Iran tried to block the straits, we think they could only do it temporarily and probably only for a short period of time. So what are the sinkers? Well, the sinkers are an acronym for China, Iran, North Korea, and Russia. Well, Russia and China have been eerily silent as their partner Iran is being torn to shreds. Of course, both companies have condemned Israel for striking Iran, but both appear to have failed to resupply Iran with weapons, which is where the rubber really meets the road. It looks to me like these sinkers, these four countries are more united by their hatred of the West and the U.S. specifically than any love they have for one another. It appears to be a marriage of convenience. Iran is the weakest link in this axis of authoritarians. And I believe the bottom line is the sinkers have been degraded by the events of the last week. And the U.S. should be glad that it has Israel as an ally, because Israel is turning out to be very capable war-fighting machine. Now on to number 3, retail sales. Focus on the control group, not on the noisy headline. Well, there was a lot of consternation about the retail sales print this Monday when it was the weakest print in over 2 years on the headline. We like to focus on the control group, which is retail sales minus food services, autos, building materials, and gasoline. In other words, all the volatile stuff. The control group sales feed right into the GDP calculation, so we think it's important to stay on top of. The control group readings have been very stable in 2024 and 2025, and that continued with the May reading of positive 0.4%, which beat the survey estimates of 0.3%, and the prior month reading in April minus 0.1% when tariffs were at the absolute crescendo of focus. We think the May headline number was full of tariff-related distortions, and we continue to see the U.S. consumer solid with inflation falling and the labor market continuing to cool gradually. So there you have it, your 3 in 10 podcast for Friday, June 20th at 4 p.m. Eastern Standard Time. Enjoy the summer solstice, or in other words, the longest day of the year.